Chances are you came across this video because you want to know more about how to buy and sell in the forex market. Traders, if you want to learn how to trade from home and be able to make money on a consistent basis, this video is going to teach you on how and when to exactly buy and sell in the forex market. Even though you're a beginner trader or an intermediate trader, this video is for you guys. So make sure to watch this video from the start to the end and make sure to subscribe. Let's get started with this video. The first thing you need to understand is market structure. So, market structure, as you hear that word, is just the flow of the market. It tells us on how the market moves. And there are only three ways that the market moves: in an uptrend market, a downtrend market, and a sideways market. The consolidation market only happens when price has been moving in an upward or a downward way for a long period of time. So, let's jump onto our screen, guys. The first thing, traders, anytime when you have price moving in an upward way like this, when you have price pushing to the upper side, pushing up like this, and then it comes back down like this, and then pushes back up like this. This is what we call an uptrend market. Yes, because it's forming what we call higher highs and higher lows, as you can see, traders. You see, and this happens until price starts to reverse, just like this, and then the price starts giving us a downtrend market. This is the only way price moves. And from a downtrend market like this, we can probably have price now giving us a ranging market, or what we call a sideways market. These are the only ways price moves. There is no other way price moves. There is no any other market structure. So, as I mentioned, price comes up here giving us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You see, higher highs, and then here when price reverses, it starts giving us lower low, lower high, lower low, lower high. The simplest way you can trade is always trading according to the trend of the market. Meaning, if we are in an uptrend market, we're only going to be looking for buys only. So anytime when price pushes up to the upper side like this, as you can see, traders, so price is always going to come back down to retrace or to pull back. This part right here. So this is the part where we buy from, because again, we're only looking for buys. So we can't look for buys up here. You see, traders. Let me even explain this in a way that you understand it. When people start buying right here, you see, traders, people will buy off from this level right here. And then when they reach this point right here, they start to sell off, as you can see, traders. You see, now other traders will jump into here because they're now buying at a higher price. They failed to buy at this price right down here. Probably they were worried, thinking price isn't going to go probably up. You see, this was the cheaper price to buy, because remember, we always love to buy low as we can. So this was the lowest point right here. So people bought, and some people exited from here, selling off. You see, price comes back down to this point right here. Now other people jump on board, buying at a higher price, as you can see. So this pumps the price to even go higher, as you can see. So we always want to buy from this point right here, this point right here, this point right here. So we buy at this point right here, another point right here, this point right here, and then we also buy at this point right here. So traders, we're only going to be buying at what we call support zones. So anytime when we are in an uptrend, we buy at support zones. So if price is pushing up in an upward way, we buy at this support zone, and the support zone. Now, even to make things simpler for you, if you want to determine where price is going to come back so that you can buy, we can always use the previous line. So if this was our previous high, and also which is our resistance, if price breaks it right here, it becomes a support. Now you know where to buy. We buy at this point right here. Again, new higher high, price breaks it, it becomes a new support zone, as you can see, traders. And this goes on and on and on. Or you can say, anytime when price pushes up, this we call it an impulsive move. And then this is a retracement. Impulsive retracement. So we only buy when price comes back to the retracement right here. What is a retracement? A retracement is just this short-term, move to the downside, but after a period of time, prices will continue to go back to the upper side to continue with its overall trend of the market. So this move, as you can see, this move right here, it comes just half of this previous move right here. You see, traders, it comes here, then after price pushes back to the upper side. Again, this one right here comes, it retraces 50%. You see, it doesn't come up to down here, no. It comes up to here, the price keeps on just doing that. And one of the ways we can understand, okay, how far will retracement come, we can also use the Fibonacci retracement, as you can see, traders. So these are all ways on how do we buy and sell in the forex market. Now, since we know now how to buy and sell, Now we need to also know confirmation. So one of the confirmations we love to use when we were buying at this point right here and this point right here, we want to use always candlestick patterns. Candlestick patterns are the easiest to use. So we can identify patterns like bullish engulfing candles, hammer, spinning top candles. We can identify the morning star pattern. You can see all these are candles you can find at this point right here, this point right here, and this point right here. And I'm going to be showing you this all on our live market, guys. So this is how we buy the Forex market. Now traders, how do we sell in the Forex market? Again, according to market structure, we like to trade according to the trend of the market. So since it's a downtrend market, we're going to be looking for sells. So when price reverses at this point right here, how do we know? First of all, when price comes down right here and then it comes and stops at a point like this point right here is lower than this point right here, meaning now price is looking to reverse, meaning price has formed a new lower high, meaning now price is reversing. Now here we like to look for sells. Now we don't look for sells down here and down here. We look for sells on the upper side, since price is going to be pumping the pressure to the downside, selling. The only time we're going to be selling when price comes back up at this point right here, at this point right here, and this point right here, as you can see traders. So again, all we just want to do is mark out this point like that. So meaning if price has come down from here and it has broken this line right here, which is our support zone, now our support becomes resistance. So we wait for price to come back up here, then we sell from here. And then if price is coming back down again, we do the same thing. Here you don't sell just because you have seen price break this part right here. No, you wait for price to come back to this part right here, you know, where what we call a retracement. Now retracement, as we mentioned here, retracements come to the downside, here retracements come back to the upper side. So again, we sell at this point right here, and I'm going to be showing you this same exact thing on our live market, traders. So again, we look for buys in an uptrend and we look for sells in a downtrend market. Now the last puzzle piece is our ranging market. Now a ranging market is an easy market. Price is basically ranging in between like this, as you can see, traders. So this is the easiest market. All you just have to do is mark out, you know, this part down right here and this part down right here, as you can see, traders. Now when you mark out our resistance and support zone, traders, you need to understand that we're only going to sell when price comes back to the resistance, and we're only going to buy when price comes back to the support level. So one of the main things that you have to look out for at this point right here are the reversal candles. So here look out for reversal candles to the downside, and here you look out for the reversal candles to the upper side. You see, so here we sell, here we buy, here we sell, here we buy. And as I mentioned, candlesticks that we look out for are pin bar candles, engulfing candles, and morning star and evening star pattern candles that tell us price is now going to reverse. These are the ones that we look out for here, so that we can be able to buy and sell at the same time, traders. As we are doing this, we're waiting for price to break out either up here or down here, and then give us a new trend or a new type of market. Now let's jump on to the real market. Guys, before you continue, make sure to subscribe if you're enjoying this video. So traders, now this is our market, as you can see, traders. Now the first thing when you look at the 4-hour candle, guys, you're going to notice that price has been coming in a downtrend form. You can see, traders, in a downtrend like this, you can see now price is trying to push back to the upper side. So traders, now the first thing is always understanding when a new trend is starting. So when you zoom into our 4-hour candle, we are going to see closely that price has started going up from this part right here. You see, traders, this point right here, as you can see, guys. So which is also a support zone, as you can see. Now here price made this part right here support, but this side it was a resistance. You can see even here it made it a support and price bounced off there. You can see, traders. Now this is how we know a new trend is starting. So we zoom into the 1-hour candle. Now on the 1-hour candle, since we are in an uptrend, we love to look out for now impulsive moves and then retracements. Remember, we are learning how to buy and sell in the Forex market. Price pushes up from this part right here. You see this part right here, as you can see, and the trend is strong, meaning you wait until price goes up probably at a level like this, which is again a previous recent zone like this. You see, then price starts coming back down. You see, now again, as I mentioned, price only comes back to zones where it has already been. So you see price pushes back to this zone right here, which you can call also a retracement. You see, so meaning you wait for price to come back to this zone right here. You always mark out these zones. You can see, traders. So we look for our buys when price taps into this zone right here, and the other major factors we can look out for. But again, this is an impulsive move from here to here. This is an impulsive move. Then this is a retracement, as you can see. Now price again, we can't forget that it formed this new level right here. So here we buy, you know, just like this, traders. So you can decide to buy in the next candle, putting your take profit just like that, and then putting your stop loss just like that, as you can see, guys. Then now price forms a new zone, this one right here, as you can see. But when you look closely, price broke it with really much momentum, giving us another impulsive move. Then the retracement comes in, you see, traders. So whenever the retracement comes in, always look out for the candlestick pattern for confirmation. So you can see here the candlestick patterns. We have the hammer in there, we have the pin bar in there. So again, we take our trade, as you can see, traders, targeting a previous zone and then putting our stop loss just below like this. You can see, guys, we are targeting more than 30 pips, guys, and we're risking only 10 pips. Imagine, guys, these are over 2 trades. This is another trend market, guys, you can see, and this keeps on happening and more. You see, traders, it keeps on going on and on and on. You see, we always look for buys in an uptrend and then look for sells in a downtrend. So now, traders, this is the downtrend market, as you can see, but this is on a higher time frame. But again, you can buy and sell in the forex market in any time frame you want, but this is now a higher time frame. Our main point of interest is this spot right here where price started to break, as you can see right here, giving us a impulsive move to the downside. As you can see, as I mentioned, we don't just sell here. You see, when you sell from here, you're at a risk, so you always want to wait for price to come back to this spot right here. You see, you don't then sell there because you don't know how far price is going to go down before coming in for retracement. So you sell when price comes back here. So again, we mentioned about confirmations. What confirmations do you want to see? Probably, let's say this is a 1 hour candle. You see, we see an engulfing candle. This is a bearish engulfing candle. So meaning you take your trade just like this, your stop loss above like this, and then putting your take profit just down there. You can always measure out the previous impulsive move. So you measure the distance between here to here as your impulsive move, because price will always hit that target as long as you're in a downtrend market. So that will be our first trade. Now after that, we would mark out another zone, which is this part right here. Obviously, you can see, traders, again, that is another part right there, as you can see, traders. So price broke this part right here, again comes back here to reach us at this part right here, you can see. So we only look for sells only in a downtrend market. So, and again, you can see there we have our confirmation right there. We have more of an engulfing candle, but more of also a hanging man pattern, which is this one right here, this one. So again, you take your trade whenever you see your confirmation, traders. As I mentioned, we like to do this mostly in a smaller time frame. You can do it on any time frame, but we love to do it in a smaller time frame. You can see, so we can take our trade exactly like this, putting our stop loss just up here, as you can see, guys, and then measuring up a previous level like this as our target. Again, you mark out this part right here, which is our support right here. Now when support is broken, it becomes resistance, so we are going to wait for price to come back to resistance, and then we sell from this part right here. You can see, guys, as I mentioned, these are impulsive moves, and then these are retracements. Impulsive moves, retracements. These are always retracements. We always love to sell when price comes back to retrace. This is in a downtrend market, traders. Let me make this clear. Always trade according to the trend of the market. Don't sell when price breaks here. No, wait until price comes back here, then you sell. Same to here, you know, same to even here. You can see, even here, you can do like literally the same exact thing. You see, traders, by trading this way, you're going to be on a safer side, because again, this type of buying and selling, you're always targeting high probability setups, but with low risk entry points, guys, because we are always confirming with candlestick patterns. And candlestick patterns are always accurate, at least 95% accurate, traders. So that is how you buy and sell in the forex market and be able to make money from the comfort of your house, traders. So if you've enjoyed this video, guys, make sure to subscribe to this channel. I'm going to be bringing in more and more quality videos for you guys. God bless you, and I'll see you in my next. Peace.